and watched out for in the trading session. Apart from that, bit of an outperformance versus Nifty, but now at the end of the day closed in line with what the Nifty was doing as well. Came off the day's highest point, at least in terms of the broader end of the market. On that note, let's pull up the advanced decline ratio as well, right? Because advanced decline ratio, where we've seen a larger gap and more stocks in favor of advances in the morning. Now, almost nearing each other, the advanced decline ratio, almost 1,300 stocks on the advanced side, 1,200 stocks on the decline side is what we saw coming in for the advanced decline ratio. So not much of a gap that we saw by the end of the day coming in terms of today's trading session. But Vivek, more stock-specific action also is something.
That's right. Quite a lot of action now. For one, have a look at the Nifty Metal Index. The entire metal pack today bounced back quite sharply. So look at Nalco, look at Hindalco. Some of these stocks managed to recover quite sharply from recent lows. Aurobindo Pharma, that was the other name that managed to do quite well. The entire power pack, all of the power stocks, including the capital goods names, so NLC India, NHPC, NTPC, all of these stocks were doing quite well in the session. But on the other hand, or on the flip side, you did see the Nifty IT taking a bit of a breather. OFSL gave a clarification saying that they're not materially impacted by what happens in the parent company in the US. So on the back of that, OFSL's emphasis, all of these stocks saw sharp correction from the day's highest point. And on the back of a CNBC-TV18 exclusive stating that there could be some curbing as far as options are concerned, you did see the capital market stocks take quite a bit of a breather. So Winnie, BSC, Angel, Nuvama, all of these stocks took quite a sharp knock in today's trading session.
Absolutely, and all that we'll be discussing through the show as well. So watch out for that. But let's start with the first segment then for today. And we have Hormaz joining us from the big wall with the top movers and shakers of the day. Hormaz, over to you.
Quite a day. It may be a quiet day, but it was quite a day indeed for the markets. And there were a lot of stock-specific movers, particularly among the broader end of the spectrum. And look at the stocks that had more than double-digit gains today. Take a look at Sigachi, 20%, Green Panel, 20%, SMS Pharma, gains of around 10%, Swelect Energy, 20%, Indoco Remedies as well at one point was up 16, 17, still ended with a 12% gain. So there were plenty and more that moved around in the broader markets and on very strong volumes as well. PSU names continue to do well for the second day running, and more it were across the spectrum, most of them on the energy front. Look at GSPL, look at GAIL, Indian Oil Corporation, all of them ending with gains of around 2 to 4% in today's trade. A lot of newsmakers as well today. Aurobindo, after potentially missing out on an acquisition, has ended 6% higher. The street likes that. Jupiter Wagons after the order win, of course. BSC and Angel One after the CNBC-TV18 news break, down 5% each. And Kalpataru Projects, of course, after the order win that they announced earlier in the day. Were stocks that had a 52-week high in today's session. Fedbank Financial was one of them. And Ixigo continues to make new highs in today's session, as does Nesco and Affle too, doing a good day today, 3.5% higher for a 52-week high. Of course, there were some underperformers as well. Good Luck India down for the second day running after the management cut its guidance on our show yesterday. Precision Camshafts moved very strongly in the first two trading sessions of the week and now has seen profit booking in the last two. Stovecraft, Voltime Transformers, a lower circuit today, and Avanti Feeds, the big rally of yesterday, fizzling out today, seeing some profit booking from higher levels. Back to you guys.
Well, thank you so much, Hormaz, for joining in and taking us through all of the stocks that made the moves, both on the frontline indices as well as the broad end of the markets. Well, it's a good time to go across to our guests on the show, both Mayuresh, Joshi as well as Ruchit, Jain. Welcome, gentlemen. Thank you so much for joining us today. Ruchit, let me come across to you first. Nifty has managed to go ahead and notch 7 straight sessions of gains. On that note, do you see further upside, or do you feel at current levels we could see a bit of consolidation?
Yeah, hi, very good afternoon. Yes, we have seen some decent pullback move from the recent lows. But if you look at the broader trend, I think since last 2 or 3 weeks, the markets have traded within that range, in which although it has formed a good support base around the 24,500, 24,400, but we are not able to surpass yet the 25,000, 25,100 range. And I think the major cause of worry that the market is watching is the USD INR, which is has depreciated recently. So I think we usually see an inverse correlation that whenever USD INR depreciates sharply, our broader markets tend to see some sort of relative underperformance. And that's the worry for the market. So we think that it's more of a time-wise corrective phase which is going on in the market. Once the market surpasses this hurdle of 25,000, 25,100 on the upside, then we would see a good momentum resuming in the broader markets as well as in the indices. But till then, I think we would see more of a consolidation phase or a time-wise correction could continue in the short term.
Okay, you're expecting a bit of a consolidation or a time-wise correction in the short term, and 25,100. Then above that, maybe you're telling us we could take some bit of a sigh of relief. But Mayuresh, 25,000 at least, that's what we managed today. Other than that, PSU banks, that's been trending in the last couple of days. Any thoughts on PSU banking side? Do you think, we're going to again see that run-up coming in? Anything you like there?
Mayuresh, I believe you're on mute.
Sorry for that. Apologies. Afternoon, Winnie. I think the base case scenario that is getting built in is Q2 might be a sustainable quarter, which means that the kind of softness that we probably saw in Q1 might continue, but it might have some of the effects waning off, specifically when it comes to NIM compression, when it comes to CASA deterioration. And therefore, I think it can be a reset quarter for the banking stocks in general, including the PSU banking stocks that you have asked for. Having said that, I think a few of the PSU banking names had a very decent performance even in Q1. And the large part of expectations that are getting built in is that deposit growth should largely be steady for a few of these names because of the sticky base that they carry. Advances growth should come back very, very strongly with GST rationalization, consumer durable demand expected to come back, as well as private capex showing some green shoots. Provisioning for PSU banks has been exceptionally strong. And therefore, I think the kind of provisions that they're carrying on their balance sheet, any kind of recoveries and write backs over and above that will mean a direct write back to the bottom line, directly impacting ROEs and ROEs in a very positive fashion. So our own sense is that a few of the PSU banks were outliers. A few of the stocks outside SBI, something like a Bank of Maharashtra or a Bank of Baroda, have given decent set of numbers. And those numbers might continue improving as we head into the next few quarters.
Well, thanks for that, Mayuresh. But do stay on with us, gentlemen, given the fact that quite a few interesting stocks which we will be discussing going forward on the show. Well, one such stock is Tega Industries. That stock fell today after the company inked a term sheet to buy out global grinding media player Molycop. The acquisition will be made at an enterprise value of $1.48 billion. Vamakshi, who tracks this particular space quite closely, is taking us through the quantos of the agreement and why Tega Industries was under pressure today.
Absolutely, Vivek. A mega acquisition announced by the company. So Tega Industries as well as Apollo Funds will be acquiring 100% of Molycop. Now, this acquisition, like you said, is at an enterprise value of close to $1.5 billion US, which is around 13,000 crores translated to Indian rupees. But just to give you some perspective, Tega's market cap as of close yesterday was at 13,800 crores. So therefore, the acquisition is as big as Tega's own market cap. Now, how are they likely to fund this acquisition? Well, Tega will hold around 77% stake in the SPV, while the remaining 23% will come in from Apollo Funds. Now, Tega will be contributing somewhere around $361 million US, or 3,180 crores, out of which there will be a corporate debt of 995 crores, and the rest, that is 2,184 crores, will come in from the equity raise. Now, keep in mind that a board meeting is scheduled by Tega on 13th of September in order to consider fundraising plans. The remaining money will come in from Apollo Funds, and they also have a contingent payment of around $120 million. Now, this acquisition is quite significant. Now, keep in mind that Molycop revenue is almost 8 times as far as Tega's revenue is concerned. The combined entity will command a revenue of 15,207 crores, and a majority of which will come from Molycop. The margins, though, for Molycop are much lower at 11.5% as compared to Tega's 20.7%. Now, though this acquisition, both generally bode well for company given the kind of growth, but out here there are 3 main concerns. First one is that this is a huge acquisition, so how the integration of this acquisition will happen, that is something that we'll be watching out for. Again, there might be some operational challenges, so again, that the street is keenly watching out for that. But apart from that, there's huge debt on Molycop's book, $1 billion to be precise. Now, the near-term target is to bring it down to 800 million, and of course, Molycop has low growth as well as a lower margin profile. So those are some of the concerns, which is why the stock was down today.
I think where Molycop today operates at is at roughly around 11% EBITDA levels. Our aim would be to try and improve that over the next 2 to 3 years to, on an average, anywhere between 13 to 14% levels. Tega, as you know, operates at a CAGR of 15%, delivers about close to 22% EBITDA. So the margin profiles are different, but But we hope that on a consol basis over a 3 to 4 year period, we would be roughly at about 18% on a consol basis.
Okay, that's a word coming in from the management as well to keep an eye out on Tega Industries going forward after this big acquisition. Let's move on and also talk about Aurobindo Pharma. That was gaining in trade, and why? Because they didn't make an acquisition. What now Bloomberg is saying that GTCR is nearing a deal to buy Zentiva. Previously, Aurobindo Pharma was among the leading names in this acquisition talk as well. When we had spoken to Aurobindo Pharma on 21st of August, they said there were talks going on with Zentiva, but they were still in early stages. And as of now, for that inorganic acquisition, right now what they said now in that time that they will be very mindful of investors' concerns. Investors were concerned that time that, maybe this could lead to maybe some debt or on their balance sheet, the balance sheet would become heavy, which would lead to a concern. And that is why when the first time that announcement came or news came in that maybe Aurobindo was looking at Zentiva, we saw the stock fall. Today, the stock is rising because CR seems like that is the likely winner for this bid for Zentiva. And this is according to Bloomberg. So today, the stock was holding on to 6% gains, almost around that mark in today's trading session. But Mayuresh, let's start with your thoughts coming in. One for Tega Industries. How are you looking at it? Is that something that interests you? Also, Aurobindo Pharma in the pharma pack.
So, Vinny, I think for Tega, as Vamakshi appropriately explained, I think it's an acquisition far beyond their appetite at this point of time. Obviously, I think it's a very complementary kind of a business because one, I think the clients that might now come through might be more holistic in nature, grinding media, mill liners. I think it's a complete solution that Tega might be able to offer. And therefore, I think from a business perspective, going forward as the integration happens, it will be value accretive. However, I think from an immediate short-term perspective, the sheer size of acquisition is huge for Tega's appetite, and that increases the leverage component. And therefore, I think once the approvals go through, how do revenue and cost synergies play out is something that the street would like to watch out for. Because I think across geographies, having these synergies come through might take some element of time. Again, I think the key pertinent point outside this is the margin profile, and the margins will definitely come down on a consolidated basis once both these entities start reporting consol numbers. However, I think with sheer volumes expected to grow up, and though I think the numbers for the acquired company is growing at 3 to 4%, I think it might be a significant value addition as far as revenues are concerned. So in our opinion, I think let's wait and watch in terms of how these synergies play out. Not taking a very bold call on Tega Industries at this juncture. For Aurobindo in particular that you ask, I think the expectations in terms of how revenues will grow ex-Revlimid is going to be extremely critical. Aurobindo believes that they can launch their own first biosimilar by the end of FY26. They still believe that the EBITDA band can be between 20 and 21%. And ex-US, I think the expectation in terms of revenue growth is something to be watched out for. So these are the pointers that will probably play out for Aurobindo Pharma as far as the core business is concerned. And therefore, I think it's very, very critical that Q2 numbers come out to be reasonably better for some element of re-rating onto these stocks. So we'll be closely watching out for Q2 numbers for.
Well, thanks for that, Mayuresh. Tega Industries, following suit from Sudarshan Chemicals, buying out a much larger European company there as well. But now moving on to a CNBC-TV18 exclusive, we learned from sources that market regulator SEBI is set to float a consultation paper to consider ending weekly expiry contracts. Jain is here with the details. Yash, take us through what exactly you are picking up.
Well, it was actually on August 21st that market regulator SEBI chairperson Tuhin Kanta Pandey had expressed the intention of having longer-term derivatives. Now, taking that intention forward, according to our sources, SEBI is expected to release a consultation paper on removing weekly expiries, and this consultation paper could be released as soon as within the next 1 month itself. What we've also been given to understand from our sources is that the ultimate intention for market regulator SEBI is to move towards monthly expiries from the current weekly expiries, but with a defined glide path to move towards that intention of monthly expiries. Also, at this point of time, one thought which SEBI has on its desk is to have a single day expiry for all exchanges, be it NSE, BSE or any other small exchange, whether it is a fortnightly expiry or ultimately monthly expiry. What we've been given to understand from our sources is that exchanges, NSE and BSE, could be roped in to seek their comments on removal of weekly expiry, and that could happen as early as next week itself. Apart from that, market regulator SEBI is looking at various ways in which retail participation in the derivatives market could be restricted. This could be done through putting some kind of threshold onto it. Also, ways are being looked at in which cash market volumes can be enhanced, but sources maintain all these moves which SEBI is currently contemplating will only be undertaken through a proper and a deep consultation process.
Well, thank you so much, Yash, for joining in and telling us through this exclusive story, a very important story, especially to track as far as options trading is concerned. Well, one particular sector that did well today, in fact, after a prolonged period of underperformance, was the power stocks. And within that, thermal power major NTPC gained over 1% today. The main reason for that was that today, our brokerage firm HSBC turned bullish on the stock. They went ahead and upgraded the stock rating to buy from an earlier hold stance, and they raised the target price to 400 rupees from their earlier 385 rupees. Number one, they say that the main reason for the prolonged underperformance was given the fact that FY26 so far power demand has been quite subdued, and along with that, the company has faltered, especially when it comes to capacity addition execution. Now, what is it that they're saying? Number one, the slowness is something that should now reverse. Along with that, they're saying the latest trigger in the company's repository will be forays into battery as well as the nuclear opportunity. They're saying power demand will benefit from a low FY25 base, much like it got penalized on a very high FY24 base. Along with that, they're saying thermal execution is now happening, and close to 1.3 gigawatt of commissioning has been done by the company recently. More importantly, they say that out of the total planned capex of 7 trillion rupees, 4 trillion rupees is actually under regulated tariff mechanism, indicating that there is stability as far as earnings forecasts are concerned. They believe NTPC also will be at the forefront of nuclear development. Ruchit, the first thing what we want to understand is, do you see a bit of a bottom formation coming in as far as the power sector is concerned, especially NTPC? Today you did see names like BHEL also move higher.
So I think from a very short-term perspective, it seems that the stock could see some more consolidation, what we have observed over the last couple of months. But if I look at a bit of mid to longer-term charts, then I think good time-wise as well as price correction has been seen after the stock made a high of around 430 in September 2024. That is about a year ago. So if one is looking for to add it to a portfolio from a mid to long-term perspective, then the risk-reward ratio is certainly favorable to go long at current levels. So only for investors who can wait for at least 2 to 3 quarters, I think they should consider going long on NTPC at current levels.
Okay, that's the view coming in from you on NTPC over there. But Ruchit as well as Mayuresh, thank you so much for joining us on the show as always and helping us understand how the day has gone by as well as individual stocks. What are they expected to do going forward? On that note, we're going to actually slip into a very short break and we'll get you the top corporate voices along with the key market events to watch out for in tomorrow's trading session after the break.
Welcome back to Markets Forward. Well, let's now go across to key corporate voices. First up is Cholamandalam Investment. The management earlier today marginally trimmed guidance for asset under management to 20 to 23% from the earlier projected 20 to 25%, largely on the back of GST rate cuts. The AUM growth will predominantly be driven by the mortgage business. The GST cut will lead to marginal reduction in terms of loan value and will be positive on collections due to lower burden on EMI. They anticipate second quarter to be slow on the back of rains and other events, but expects festive season and good monsoon to augur well for a good second half. Further expects credit costs could be around 1.6%.
Automakers are quite upbeat about GST rate cuts this festive season. Hyundai expects the GST cuts to attract first-time buyers and boost aspirational purchases. The car maker expects to see strong growth among cars priced below 10 lakh rupees. Hyundai believes this growth will help while EV sales as well as that's not all. Its Pune plant will come on stream in the third quarter and will reach close to 1 million capacity.
Well, earlier today, we also had Maruti Suzuki management on the channel. They expect GST reforms to demand in the auto sector uptick and also other industries. Adds that the GST cuts, along with benefits from income tax and the recent repo rate cut, will provide a strong boost this festive season. Retail sales are projected to grow over 20% during the Navratri season compared to last year. They added that customer inquiries have already up since 15% since the GST cut announcement. Current bookings stand at 1.5 lakh units, with 10,000 new bookings coming in daily.
We also spoke to Rainbow Children's Medicare. The management has outlined its growth plans. The company expects to maintain the margins at its new hospital and confirms that operations at the Rajamundry facility will begin this week. The management also sees strong traction in Andhra region, having added a significant number of beds over the last 24 months. The management has, though, said that the growth for FY26 will be in the mid-teens to high-teens level.
And finally, before we wrap, we bring you some key market events to watch out for. Vamakshi is standing by the wall with the key events to focus for tomorrow's trading session.
Well, absolutely, Vivek. Tomorrow's a Friday, so we'll be looking forward to the weekend. But, jokes apart, let's take a look at the economic cues that will be in focus. We'll be, of course, keeping an eye out on the CPI data that comes in from India. Apart from that, UK's GDP data will also be something we'll be monitoring. But, the capital market stocks were in focus today. It will continue to be in focus tomorrow because the SEBI board meeting is scheduled tomorrow. So we'll be keeping an eye out for any sort of outcomes that come from there. Other than that, PSU banks will also be on our radar, because government will be convening a 2-day banking reform meet called Manthan with PSBs on September 12th as well as 13th, and may discuss mergers, and PSB consolidation is also likely on the table. So that is an important meeting that we'll be watching out for. And from the primary markets, take a look at Urban Company, Shingar House of Mangalsutra as well as Dev Accelerator, because if you want to subscribe to these IPOs, it's the last day tomorrow. And lastly, CP Radhakrishnan will be taking oath as the 15th Vice President of India.
Okay, Vamakshi, thank you so much for that. Important events to watch out for, but surely no joke in terms of it being a Friday as well. But with that, we'll wrap up this edition of Markets Forward. Thank you so much for tuning in. We'll come back and there will be more on Markets and News Plus.